Hello. If you were to try to encapsulate the last financial year of SMRT in one word, it might be this one. And that's the word you'll find on the cover of the annual report, which you should read before heading off to the AGM on the 16th of July. For now, here's a quick sneak preview. In essence, SMRT operates, as you know, Singapore's dominant rail network, as well as bus routes, taxis. They also manage retail space, run a successful advertising business, and are increasingly looking to consult to other countries and companies looking for their expertise in operating these systems. But as we also know, SMRT is still coming out of the incidents a few years ago with trains being stuck in tunnels, much to a lot of people's inconvenience. So the word momentum on the cover of the annual report is both in terms of the momentum of those non-fare businesses, the momentum in terms of getting the rail network up to the standard where it should be, and the momentum, therefore, in terms of repairing its reputation. And you'll read about that in this document. Let's take a closer look at the chairman's comments, Koh Yong Guan, in essence laying out the various issues that shareholders ought to be aware of and that the company faces. And they're summarized here in this matrix for you. In essence, the government has put heightened expectations on them from a regulatory perspective, with heightened penalties if they get it wrong. At the same time, the number of people wanting to take the trains is increasing, and so are their expectations. Costs are rising, and the fare increases that we saw from the Public Transport Council last year aren't commensurate with those costs. So even though, yes, there's been a fare increase 2 years ago, it's nowhere near enough to make up for the increasing costs that they're facing. And all of this on the back of the aging rail network, which obviously needs to be upgraded at great expense. So we've got this confluence of issues which is making life difficult for SMRT. Koh Yong Guan doesn't mince his words when he says in his commentary that the current public transport operating structure is at an inflection point. In other words, things need to change. Most importantly, as he himself points out, most fundamentally, operators must be able to recover the costs of operations and asset ownership from fares. That's almost stating the obvious. Of course, if you're running a rail network, if you're running a bus network, you must be able to make a return from it. And that's really what he's pointing out here, adding that the authorities seem to be getting his message on that. But obviously what's most important next is exactly how this operating model, this operating structure is going to change. It seems that there are three models on the cards. One is that nothing will change and SMRT will continue to own the rolling stock, the signals and so on, and will have to own both the assets as well as operate them. There's the other extreme, which would see the government take over ownership of the rolling stock, the signals and so on, and SMRT would simply be an operator of them. And then there's the middle ground, which would see the government take back some of those lines, but not all of them. At this stage, the most recent commentary you'll read is that SMRT sent its most recent proposal to the government back in April. And here we are now in May, June, July, 3 months on, and we haven't had any update at this stage. Now, maybe an update will come before the AGM. But in the meantime, this is obviously going to dominate discussion precisely because it is so fundamental to SMRT's operating future. So whether we're actually going to see those changes, well, this is what you'll read in the annual report in the chairman and echoed by the CEO's statement. SMRT has intensified discussions with the authorities in the past year and submitted a series of proposals for a new sustainable rail operating and financing framework. If you're hoping for a date, you're going to be left wanting. We will continue to work with the authorities in the coming year towards early implementation of the changes. So that would suggest that there will be changes, but no time frames been given. And in fact, if we turn to this page here, further back in the annual report, you'll also read this comment under the heading Outlook, and that is that the group expects that the impending changes to the rail financing and bus operating models will address the sustainability of its fare business in Singapore. So that's really the light at the end of the tunnel, if you'll excuse the pun, that there will be some changes. It's very interesting, this phraseology. The impending changes to the rail financing models. Now, we know that the bus model is changing, the government taking back the routes and then allowing the bus operators to contest for them. But impending changes to the rail operating model, Haven't seen any announcements at the time that I'm standing here talking to you. So perhaps there's something in the offing, something awaiting in the wings. The second thing, as I mentioned, that you need to look out for is the whole issue of capital expenditure. That aging rail network that we talked about earlier needs to be upgraded. Sleepers need to be replaced on the entire north-south line. The signals, everything needs to be brushed up. And they're moving more to a preventative form of maintenance rather than just reacting when something goes wrong. But still, the capital expenditure means they're going to have to pump more money in order to bring the rail network up to speed. How much money? It's illustrated on this graphic in the annual report. Look at the chart on the right. And what you'll see here is that big blue, green line is in essence the amount of money that they're pumping into the rail infrastructure alone. So that's not to say that they're the only ones being given capital injections, giving cash in order to upgrade the systems. You can see that because obviously the line on the right is much taller than the line on the left, but it's the rail where a lot of that increase is actually going. And that capital expenditure increase is also flowing through to the P&L, and here to the cash flow statement we see free cash flow, a negative $414 million. On the revenue front and looking at other parts of the P&L, this is how the revenue is shaping up. You can see a steady increase in revenue over the years. 4% increase, to be precise, of which the increase by the Public Transport Council is really only just starting to be seen. A very important part of that revenue now is the so-called non-fare business. So while group revenue was up 4%, non-fare was up 12.4%. Well, it's still a small part, but it's obviously growing much faster than the rest. Then on this chart, you can see how net profit is falling. So despite that increase in revenue, net profit is down because of the depreciation on those new capital investments that they've made, as well as obviously the fact that the costs are quite substantial and growing. Particularly labor costs are increasing as a result of the increase in salaries that some of their staff have received, bringing them in line with the market. As a result of the money flowing out into capital expenditure, we've also seen the dividend down at its lowest in 5 years. And cash and equivalents, you can see also, obviously after the capital raising the previous year, the money is obviously being put to use, which is why we're seeing that number down. And obviously debt is something that investors also need to be aware of. Moving ahead to the segmental revenue, before we have a look at the segmental breakdown, you can see here that slight increase in the grey bar, but the steeper increase in the pink bar, which illustrates just how important those other parts of the business are getting. Let's drill down into that finally, and this is where it gets really interesting. In previous years, when I've stood here talking to you about the annual report of SMRT, I've highlighted that their non-fare business is actually much more profitable, and that trend continues here. You see here on this page, where we've got the train and train and LRT services broken out. Can you see that little speck of pink underneath that first grey bar? So the grey bar showing revenue has lengthened, more revenue, but the pink bar is much shorter than last year. In other words, it's barely profitable on an operating basis. They're going to get 9 new trains, and as I mentioned before, going to move much more towards a preventative maintenance regime rather than just a more reactive regime, fixing things when things go wrong. The LRT, the losses continue there. 8 new trains coming on stream before the end of the current financial year. Revenue looks very much in line with last year, but obviously we've seen the losses widen there. On the bus side, slight increase in that grey bar, slight increase in length, so revenue's growing, but you can see there it's still making losses. The losses weren't as bad as last year, as you can see, but altogether, both rail and buses made a loss of $25 million. The first time that the fare business has made that loss. On to other parts of the road, taxis in particular. Taxis slightly more profitable than before, and it now has the largest fleet of Toyota Priuses, hybrid vehicles on the road. When we look at some of their non-fare businesses, this is where things look much healthier. You see from a rental perspective, rents increased, operating profits increased even more, and SMRT is looking to broaden its retail spaces beyond the current network. In other words, where currently they've been situating their retail assets at or near MRT stations, Obviously, they're going to look further afield to see where else they can derive rental revenue, what other sort of retail space they can take up. The Kallang Wave is incidentally the name of the retail mall at the Sports Hub in Kallang. And perhaps that'll be a feature of next year's annual report when we get to find out what sort of contribution that's made to SMRT's results. The advertising business, the second last to mention, once again, perhaps not quite as profitable, but certainly the pink bar is is a tad longer this time around, indicating that once again rental and advertising are very important parts of the business. And last but not least comes the other parts of the business, the engineering parts, you could say, where SMRT outsources its know-how, its experience to other countries and companies so that they can also benefit from the experience of SMRT in terms of how to run businesses like theirs. Expect to see more contracts in the Middle East, in China, and in Southeast Asia. At least that's where the focus of their international business development team currently is. So that's a quick view of the SMRT annual report. Here are the details of the AGM, 16th of July, that's a Wednesday, at the Marina Mandarin. I wish you a very pleasant AGM.